All right. Hi, I'm Kayla Henry, and I'm a realtor in Bozeman, Montana. And I'm here with Kathy Zaleski, also a realtor in Bozeman, Montana, and we're both at Realty One Group Peak. And today we are with Emily Kennedy. Thank you so much for being here with us, Emily. She is a lender at Stockman Bank in Bozeman, Montana. And so today we wanted to do a little video talking about rate buy downs. And so I guess, Emily, start us off with just what is a rate buy down?
Yeah. So I feel like rate buy downs in particular have gotten more traction and more conversation around them when rates went up a little bit. I think when rates were really low, people were pretty thrilled regardless.
Yeah.
It seems like it was less of a conversation than it is now.
Yeah.
Rate buy downs in their kind of most pure form is a relation between rates and fees. And so sometimes that's called a rate buy down. Sometimes it's called paying points. Sometimes it's called paying discount points. There's different terms for it, and you'll hear it throughout the industry. But what it boils down to is that you can choose to pay more in fees for a lower rate, or you can opt to pay less in fees and result in a higher rate. And the reason for that is when I have somebody call me up and they say, I want to buy a house.
Right.
I want to put 20% down. I have good credit. I'm going to live in it and it's a condo. I'm busy plugging all of that into my little software that pulls rates. And what it actually ends up spitting out is a big rate sheet.
Right.
It's not saying you can have 6%, you can have 8%. Like, sorry, but but it's not giving you one option. It's actually giving me an entire list of rates, and it'll have rates with prices next to them.
And are those rates specific to that buyer?
To that
based
scenario,
off of their
based on their
scenario?
down payment,
Yeah, okay.
based on their credit score, based on whether they're going to live in it or not.
So
we put in all of those little parts and pieces, and then what it's spitting out is an entire list of rates from very low to very high. And next to them are a whole bunch of prices and things like that. And I don't say, well, at 6.5%, it's priced at 101.87. Like, that's not going to make sense to you as a buyer. And so my job is to translate that into a cost.
Right.
And so when we're talking about a rate buy down, we're actually talking about me looking at your specific info that's plugged into this rate sheet. And then I'm going to, as a lender, start to talk to you about your goals a little bit to see if a rate buy down is a worthwhile investment to you. Because it's a cost you pay at closing. You don't get it back. It's a fee. We can call it a lot of things, but ultimately it's a fee you're opting to pay.
Right.
There's some fees as part of a transaction you don't get to pick. You have an appraisal, we all got to pay for our appraisal kind of thing. There's certain fees they're just fees and we have to pay them no matter what.
Yeah.
But then there's these fees are your optional fees, and those are your strategic fees, right? So those are tied to, is it worth it to me to pay these fees for this resulting lower interest rate? And so that's kind of where the conversation starts.
Okay. So what lower interest rate in general would equate to lower monthly payment?
Correct.
Okay. So if the par rate, that's probably not even like a term used very often anymore, but let's say like when you go on bankrate.com and the interest rate today for a mortgage is 6.25. So I say, Emily, I've heard I can buy down my rate. Would it cost me to buy down the rate by 1 point? So instead of paying an interest rate of 6.25 to buy down the rate to 5.25, I'm sure that depends on everybody's scenario, right? But so let's say that just for round numbers, if that's okay. If you're not okay, we can delete this part. We never delete anything. But anyway, okay, so let's just say that, well, Kathy, to buy for you in your scenario, to buy down that rate by 1 whole point will cost you $8,000. And I say, okay, maybe 10,000 is more appropriate. I don't know. I say, okay, let's do it. How does that affect my payment? So at 6.25, my payment was $2,500 a month. And at 5.25, my payment is now $22,000 a month. Okay, is that so why would I want to do that?
Okay. So a couple things with that.
Okay.
The first one is a point is actually not a percentage point. So it's not going from 6.25 to 5.25.
Okay.
Because a point, remember, is a fee.
Okay.
And so that's like
Misconception
the world's
number
most
one.
common, like very, very common misconception, because a point should be a percentage point, right? It makes sense. But in this case, it's actually a cost.
Okay.
And they're not resultant of the same. So paying 1 point doesn't get you a full percent improvement.
Okay.
And so that's kind of the first thing. And it can be a little confusing because what you just said should make sense. And in fact,
That's the way I
it
always think of
doesn't.
it.
So let me try to break it down for you a little bit.
Yeah.
A point is 1% of your loan amount.
Oh, okay.
So if I have a $100,000 loan, a point is $1,000.
Okay.
Okay.
If I have $1 million loan, a point is $10,000.
Okay.
Okay.
And so forth.
So that's
And
where we get points
That's
from.
what a point is. And so usually we can charge up to a little less than 5 points. And so if we have a small loan, that might be $10,000. And if we have a big loan, that could be like 50 grand, right? That could be a lot of money.
Right.
And so in terms of the dollar amount, it's actually tied to how much your loan amount is to
Okay.
even come up with what is a point.
What is a point?
Okay.
It's
That
a
makes
percentage of
sense.
your loan.
Yep.
So
Okay.
your mortgage and what a point is for you
Right.
is going to be different than me or you. And so that's kind of the first like baseline knowledge part to
Okay.
kind of talk about this stuff. So if I pay a point, now
Right.
let's say you're like, I just want to pay 1 point and buy my rate down a little bit. That might be an improvement from, like you were saying, 6.25 down to 6 or 5.8 or something like that.
So-
It's not going to buy you a full
Percentage point,
Usually it costs a bit more to get a full percentage improvement.
Right.
Is usually can be multiple points to get you there.
Right.
Okay.
And it's why you don't see people really buying their rate down to 2% like the good old days,
Yeah,
right?
no.
From
'Cause it would
up
be
in the
like
sixes or something like
Couple
that.
$100,000.
And where lenders aren't allowed to just charge you 20 points.
Right.
There's actually laws that prevent us from just going nuts with points and trying to kind of lure people in with a 2% interest rate when really that's not where the market's at and prices don't really support that kind of thing. And so once we kind of know like there is, for everybody it's going to be a little different. Even if all three of us, let's say we're all buying a house for $1 million. If you're putting a lot down, you're going to have, and let's say we all asked the sellers for a $10,000 credit.
Okay.
If you're putting a lot down and I'm putting some down and you're only putting a little down, that $10,000 will only be maybe 1 point for you or 1.5 points. And for me, with my smaller loan, it'll actually be like 2 points or something like that. And you with your even smaller loan, that $10,000,
Can go a
you
long
could
way.
probably
Long
have
way.
3 points. It depends on, again, what your loan amount is. So all that to say, 10 grand, if we're all buying the same house and we're all getting a credit for $10,000, it is not necessary. We don't know how many points we have until we know what their loan amount is.
Got it.
Okay.
Got it. So very
So,
complex.
it is,
I mean,
and
that's
that's-
why there's
And so
lenders.
from a lending standpoint, like I'm giving you kind of the back end, I'm kind of backing into this conversation about points. Usually when I'm meeting with clients and talking to them about it, we keep it as simple as rates and fees are directly tied to each other.
Okay.
You can choose to pay more at closing or pay less at closing, and you will have a different resulting interest rate as a result.
Okay.
And so then I'm going to let them know what the difference is in their monthly payment. Let them know how much all that costs. And I'm just going to give it to you in a dollar figure instead of being like, well, your points are
Points
different
in
than
this.
her points. And we're not going to do all that, but that's the background on it. I'm going to say, if you buy down your rate, we're going to use your $10,000. We're going to buy down your rate. Here's how much your payment will go down.
okay.
And then that's kind of a lot more helpful, truly,
Okay.
information
Yeah.
for a buyer is here's how much it costs. Here's how much you'll save.
So the result, though, at the end of the day,
Yep.
whether it's for me or Kayla or you,
Yep.
the result, though, at the end of the day, this rate buy down
Yep.
will result in a lower monthly payment.
Correct.
Okay.
And so then sorry to cut you off.
Yeah, no, please.
So the conversation around whether or not it's worth it, you have your immediate term impact, which is you pay for it and you
Yeah.
get a lower monthly payment right out of the gate, right from day one. That's worthwhile because my payment is cheaper. And so for some people, that's as far as the conversation needs to go. This is an expensive place to live, and if I buy down the rate, I can afford the house I want.
And I'm planning to live there for a while, right? I've
So
always heard that's a
that's-
key piece.
That's the second part of it. So that's more of your medium to long-term conversation, which is how long do you see yourself in this house?
yeah.
Because it does take several years to recoup that upfront money
Right.
in your monthly savings. And so first is, does this make the difference between you getting the house you want and not?
Right. Yeah.
That might be good enough right from the get-go.
Yep.
Second of all, are you going to be there long enough to recoup your monthly, all that you pay, you chose to pay it all up front, and now you're saving a little bit every month. And so once you break even, let's say after 3 or 4 years or something like that, then it's worthwhile from a long-term standpoint
To have done that.
And so that's part of that conversation, which is, did you find a house, but you really, you plan to have kids in the next couple of years, and maybe this is just a good place to kind of get into, but we really hope to grow into a bigger property soon. Then you may choose to have a higher interest rate to begin with, not pay the points, because it's not going to be a worthwhile investment for you long term.
Okay.
You're okay with the higher rate, you're okay with the higher payment, because you know that long term, it's really not going to be worth it for you financially
Yeah.
Okay.
to do that.
Tricky.
It is tricky.
Lots of
and
math
that's where,
balancing.
again, I know. And so really, like, my job again is to meet with the client, talk to them about their goals, inform them of what their options are. But then we're going to say, if you're not going to be here for very long, what do you think about just choosing a higher rate?
Right.
And this
go
is why I feel like we've talked about it in some of our buyer videos, but to me, this is why you want to work with a local lender. There's a number of other reasons, but you want to be able to go in and sit down, or at least get Emily on the phone and have these conversations with her. Because I think if you're just dealing with, Rocket Mortgage or somewhere online, it can be really hard to have these intimate conversations with somebody who doesn't know you, doesn't know the area, doesn't know the real estate market.
Basically answering a phone in a call center and giving you the slot that you fit in
blanket.
is what they're offering you versus like working things around a little bit.
Thanks for saying that. And the other thing is that, like, we all want the lowest rate. I mean, nobody wants a high rate, kind of just from a general standpoint. We all want the best rate we can. And so then if you're looking online, you say, well, this company is offering a lower rate. Well, we don't know what fees they're charging. We don't, they haven't told you that you're paying points to get that rate.
Yeah.
They certainly haven't talked to you about your goals and plans.
Or maybe you don't
like
even
that.
have any of your financial information.
They don't know anything about you. And they're also not letting you know exactly how much it costs to get said rate.
Yeah.
So you look online, you're like, well, why can't I have this? You can.
Right.
There's cost involved.
Right. It will cost you.
Right.
And where are you going to get that cost? If you're a buyer bringing 3% down to a FHA loan, and that cost is $20,000, I have had lenders do this in the past. Well, ask the seller for the money. Well, the seller is under no obligation to give you that money. And if there's another buyer out there that doesn't need 20 grand, and I mean, this results in, if we're asking the seller to help buy down that rate for your loan, which is a thing that we can do, it doesn't necessarily come out of you as a buyer, your pocket directly. It doesn't have to, but that is an ask. That is not a given.
No.
And the seller is under no obligation to provide that to you. I think it's very interesting that sellers will, and this is something Kayla and I, in our end of the industry, so a seller will say, well, they came in with an offer at XYZ, or I maybe when we're working with a buyer, but anyway, if the seller is willing to help buy down your rate, what that does to a buyer's payment is more impactful than if they were to lower the price of the home by $10,000.
Yes.
So as a buyer, if you're making an offer on a home and you offer them list price and then ask for $10,000, that is usually, to the seller, it's going to be the same thing, whether they give you the $10,000 or they lower the price by $10,000. To the seller, it will make no difference. But to a buyer,
how that money is, the difference between, I'm going to say, a seller credit versus a lower purchase price can be dramatically different. Emily can obviously chat more about that. in detail, because that's usually what I'm recommending for my buyers these days, is offer closer to the asking. And again, very market dependent as well, right? So not something we're always asking for, or not something we always maybe need to ask for if rates are maybe better. But given our current market where rates are a little bit higher, purchase prices have remained relatively stable. That is something that is a very good tool, I think, that can help buyers, specifically first-time home buyers, but any type of buyer, get into a home more easily.
So we kind of talked about, there's a couple scenarios where buying down the rate doesn't make sense.
Yeah.
Number one, if you only plan on being, as we just discussed, in the home a short time, you're kind of losing all that money up front, right? Okay, so then I feel like also, let's say I'm a buyer and I have a fair amount of cash. Let's say I could put 20% down, okay? Now, there might be different ways that I don't have to put 20% down to get a decent loan. I could put 10% down. Some loan products, I could put 3% down. And now, there's going to be a magical equation, right, Emily, where I should put 3% down and then buy the rate down with maybe another $10,000 and keep the rest of my money to be able to do something else with, or maybe make improvements to that house or something like that. There's got to be a point in time where it doesn't make sense either to buy down the rate, or it makes more sense to put more money down. What are those kind of scenarios?
Yeah, and you definitely touched on several of them. One of them is, if we're not going to be there very long, let's put the money toward reducing the price. Then you owe less, and when it comes time to sell, you have to pay off less mortgage at the end of the day.
Yep.
So that's totally a scenario where I think the most important thing is having a really good team. So you have a realtor who's really paying attention to those kinds of details. And you have a lender who's keeping an eye on that stuff too, where you can call me while we're making the offer to say, hey, they're offering us $10,000. How can we use it best?
And can we use it all?
Right. And that's another thing, is there can be some limitations based on the size of the down payment. And so again, we want to have this. How can we use it best?
Yeah.
And sometimes we'll split it. They're offering $20,000. We're going to use 10 of it over here for our rate buy down, and we're going to reduce the price by 10. Sometimes,
Or the loan.
a price reduction of
Okay.
10,000
Okay.
if we've got 20 to work with, and sometimes we split it up.
Yeah.
But where you have a really good team who's in that communication throughout both the offer process and through the loan approval process, obviously, we can do a great job of saying, well, their goals really line up more with, let's buy this rate down as much as we can. Throw it all as a seller credit, and I'll spend it as much as I can to get their rate as low as I can.
And that was something I just recently did on a condo for some clients. Was, we negotiated $10,000 of seller credits, $9,000 really, to begin with up front. That was part of our original buy sell.
Yep.
And then inspection came up, and there were a number of items we also wanted to ask for either a price reduction or more credits. So call the lender, how much more can you use? And she said, actually, we can't even use all 9,000. Even though I checked with her, it was slightly annoying. But the point was, we were then able to use the rest of that towards more of a price reduction, because they could not use any more seller credits. We had maxed those out.
Yep.
And so it was just so crucial for me to be able to get a hold of the lender very quickly and utilize and structure the offer. I always say, from my side as a real estate agent, right, Kathy? I mean, to me, our job is to get you the money, however much we can, with whatever terms and all those things. But we then want to talk to our lender and say, talk to your lender about how you're going to use the money, right? I can't help you decide whether it's worth it to buy down your interest rate or have, reduce your closing costs, or however you may choose to apply it.
Yep.
My job is to help you get the money and then work with your lender on your best structure.
Yeah. And so I think, like we've discussed, having a team of people, I would say that talking to you as a buyer, because this is about loans, so it's not really relating to sellers very much, but also be flexible. Like, we're going to come at you and say, okay, listen, we can use this money this way or this way. Be willing to let your mind absorb
because it
different scenarios, because Emily might say, hey, this is good, Or you might say, hey, maybe this loan product will work better now that we're looking at this type of house in this location or whatever. But be flexible. If your goal is to become a homeowner, hopefully you've vetted us enough to know and feel comfortable with us that we are working in your best interests. Again, if your goal is to become a homeowner, the numbers game, and I don't mean to make light of it, but there are different ways that things can happen. And we want to do the thing that's most beneficial for you. And that does involve the three of us working together to make the most sense. Yeah. But again, I would say be open. Keep your mind open to the fact that, well, it's buying a home is stressful, not as bad as selling a home, but buying a home is stressful. But be willing to listen and be open-minded about, okay, we're gonna change this a little bit. Don't get stressed out because there's some change, because we're likely doing things that will benefit you long term.
Yep.
And so we kind of talked about this. I mean, sellers can pay for rate buy downs for buyers. Is that correct?
Yes. And so you guys kind of touched on this too. Sometimes we'll do a little rate buy down. So sometimes people will choose to pay a part of a point. Maybe they'll only pay $200 or $300 toward a little rate buy down because it looks a little better. We don't have to always. We're not always like swinging for the fences
of money.
This really big pay down. Sometimes it'll be like, hey, the difference between these two rates is only a couple $100. Let's use it. And so sometimes we're using a seller credit toward paying for that appraisal I mentioned, and we have other closing costs in addition to our points, and so. Usually I'll have you guys just put on your contract to put toward closing costs and prepaids. And that's kind of like a blanket term that includes points.
Yeah, that's it.
And then we can kind of be flexible amongst me and the buyer to kind of come up with, well, how do we want to use this? We put a couple $100 toward a little rate buy down, put the rest toward your other stuff. Do we want to buy it down a little more? And that's where I'm kind of having that conversation, trying to give you some options.
And talk to us a little bit more about when you say your closing costs. So kind of what I always say, and correct me if I'm wrong, but that is your money that you have to come up with out of your pocket. And so if you're buying a home that maybe
seller credit.
So your seller credit, like if you're applying your seller credit towards your closing costs, not an interest rate buy down.
Right.
That means you have to come up with less money out of your pocket.
Right.
Is that correct?
Yes. So the easiest way to think about it is you have your down payment and you have your closing costs, and you might also have some points. Those are the optional part, remember? Right. And so when we're doing our math in my world, we're really just doing a big tally of debits and credits. And so we've got, here's all our costs. We have our down payment, our closing costs, our points, and here's any credits we have. And here's our earnest money and things that maybe are offsetting all of those costs.
Right.
And so we are sometimes paying for all of our closing costs and some points, and that can be something a buyer chooses to pay all themselves. It could be we have a little credit for something that came up during inspection for $1,000, and that's just kind of like coming off the bottom line.
Right.
So we've got all our costs, here's all our credits, here's what you need at closing. And so when I do proposals for people, I'll usually give them this bottom number and say, if you put 5% down and you buy down your rate to blah, here's how much you need. And then we're kind of backing up to, okay, if I get a seller credit for $5,000, we're taking this bottom number down here, minus 5,000.
Right.
And if I can always just kind of give somebody a bottom line, then whatever credits we've got that come along, we're just subtracting off of.
It's just
here's
getting
all
better.
the stuff we need.
Yeah.
Here's all the things to do it. And then if we get some help,
Yeah.
that just gets a little smaller.
Yeah.
And that's usually easiest because there are some, we've talked about a lot of like, well, we could do this or apply it to that or put a little here or maybe do a lot. And so a lot of times for just when you're buying and you're juggling all of that information, it's usually helpful to see how much do I need? How much help am I getting? That's how much. Here's how much I have to write a check for at the end of it all.
And what sometimes I'll try and help buyers, what I'll say to buyers to help them somewhat understand is having less money out of your pocket. It's like, well, if you're buying a home that needs quite a bit of work, that might make more sense than buying down your interest rate, right? So having that extra $5,000 to do new carpeting or get new paint, that can sometimes be more valuable than your interest rate and thus your monthly payment being $50 to $100 a month different.
Right.
Right. So I do think it's really important to understand for buyers specifically how you choose to allocate money and
Yep.
working with somebody who really has a grasp on your situation, and then the programs and structures that are available to you and thus them.
Yeah.
Really makes the complete package of truly getting you in the best possible position for your specific scenario.
Yeah.
And that's why I think talking lending and interest rates and everything is often so complicated, is because it is so situationally dependent.
Right. And it's about the buyer's goals. It's about the seller's willingness to participate in helping the buyer get their goals.
Yep. Well, yeah, because you just said basically rates and carpet are now directly tied to one another in some ways.
Could it get more
because
complicated?
Well, and that's where, because all of a sudden we want new carpet,
Yeah.
which means we need more money in our pocket, which means we need to spend less money,
Yeah.
which means we need to charge you less fees,
Yeah.
which means we need to have a higher interest rate to get you there.
Yeah.
And that is
It's
a
house-
lot.
I mean, it is. It's a whole
And-
string.
And that's where you're going to be here saying, this is the need. I'm going to be here saying, I'm going to be over here with my little abacus, like doing all of that. And then ultimately being like, what do you think about going for a little higher interest rate? It'll save you some cash and get you the carpet.
Right.
Yeah.
And the back end is kind of what we've been describing a little bit, which is how much is a point? What does that mean? But really it's, here's our goals. Here's how much money we need to do those goals.
Yeah.
And then we work together to come up with a really good plan.
Yeah.
So rate buy downs are definitely something that you're going to hear about if you are in the area in the time of your life that you're purchasing a home. They're not. It's a great way to potentially reduce your monthly payment. But if there are other things that are also important to you, new carpet or paint or a new driveway or adding a pond, or I've been to ponds lately. So if those are also goals, like then you need to work with seasoned professionals who can help advise you. Like, okay, well, how does this look, and what does that mean ultimately? If you want to keep $10,000 in your pocket on the purchase of this particular home, what does it do to your payment? And can you afford that payment if you want that $10,000 in your pocket? Or maybe you want a lower interest rate, and I will live with this gross carpet for a year until I can save $10,000 to put in new carpet.
Yeah, where
It's
I'm
a lot.
going to be here a long time. I'll have plenty of time to put the carpet in, and it'll be worth it to have the low rate.
Yeah.
Right.
So
There's a lot. So there's a lot of intricacies, but yes, rate buy down is a thing that's actually happening. It can help you get into a home with a payment that you're comfortable with. It's an option. It doesn't necessarily have to come out of your pocket as a buyer. There are a lot of ways to structure things that still might get you to the payment that makes you comfortable, that may or may not include a rate buy down.
Yep.
So lots of things to consider here. And we will definitely follow up with Emily. We're going to do at least one more video with Emily today, but in the future, I think Emily is a great resource if you are a buyer. Please, her contact information will be in the comments. So please reach out to Emily, and thank you again so much for your time. Do you have anything? Sorry, I don't mean to be cutting anybody off.
no,
but-
this is great.
Okay.
We covered a
No,
lot.
I would just say sellers, keep in mind this might be something you'll also see in offers that you're receiving, right? And it's for all of these reasons we talked about, that it really can help a buyer to have you contribute money to the purchase. Yes, you're not obligated to, but if it's your one offer, or it could sometimes even be a stronger offer than something else. We can talk about that in another video, but
Well, and it doesn't. It's no different than lowering the purchase
Yep.
price. I mean, the amount as a seller, the amount of money going into your pocket is
money is just money to a seller. 10 grand is 10 grand to a seller.
Yep.
To a buyer, 10 grand can mean a whole host of different things.
carpet, paint, a pond,
So
or a lower interest rate.
Yeah.
So thanks again for watching. We always appreciate you guys taking the time to watch our videos. Please subscribe and like, and don't forget to reach out to Emily if you've got questions for her about financing. Thanks so much.
thank you.